So learning to trade Betfair can be a little bit overwhelming at first. So in this video, I'll share a low stakes trading example that beginners can follow along and replicate straight after watching. There's around about £7 profit in 2 minutes of trading here, and the explanation is going to be as simple and clear as possible. The video's description down below contains more advanced help, but the key thing to bear in mind here when watching is you can't always predict price movement, but you can think in probabilities and maintain discipline with your trading execution. All will come clear when you see what happens next with me explaining here. So here's my trading screen for Haydock at 245. Now I'm going to play this at half speed on the screen. You'll see the timers ticking down slower because I want it to be clear for beginners, for everybody, so everybody can understand what's going on. We'll do a bit of trading, we'll go through some slightly more technical stuff and some indicators and how you should be approaching this. But there's a couple of key points that I need to make here. So low stakes doesn't always mean low profits, and you actually don't need to use large stakes a lot of the time to make a nice consistent side income or even a full-time income. Think about it like this: if you just take one tick from each race on 100 quid stake or even a 200 quid stake, which might sound like a lot, but it's not just for one tick, then you can pull out £3 or £6 a race. If you can do that consistently and you've got a good reason for what you're doing and you're reliable and consistent, then those profits build up nicely. You think, in the quieter months there's 15 or so races a day, £5 a race, you're going to be pulling into about 75 quid. If it's a busy bank holiday, there might be 70 odd races in a day. If you're going to trade all of them and manage to get £5 out of it, that's 350 quid tax free. So don't get too stuck on stakes and stuff like that. So looking into this race here, all we're going to aim to do is take a few ticks out of this race at low level stakes, and I'll show you why and how you should approach that clearly as somebody who's beginning. So we've got a 245 race at Haydock. It's low liquidity, which means that it's going to suit lower stakes anyway, so we don't overexpose ourselves in terms of risk. There's a little bit of activity coming into the market now, not really a lot, but it's going to pick up in the next minute or so, and the reason for that is because the previous race has just finished. So people's attention moved from the previous race to this race, and so the liquidity comes with that. So everything will jump into life in just a second or so. But at this point in time, I've already got my eye on something. You may have seen that I've put in the third ladder there, Chef d'Oeuvre, if that's how you pronounce it. There's been a little bit of volume come through it on the Betfair chart down the bottom there. And it's important to compare the charts against each other because everything's inversely proportionate to each other within this market, meaning that if runners 1 and 2 go out in price, it's more likely that runners 3, 4 or even others will be coming in elsewhere because there's a balancing act between them all. So I'm going to look to trade Chef d'Oeuvre here and look £250 stakes, very low level stakes. And what I'm looking for is a confirming signal for a little bit of money to come into the market because we're trading the money here. Too many people focus on form and stuff like that. It's not about that. So I've backed Chef d'Oeuvre for £100. And you'll note that I backed that at 5.9, which is a separate issue to do with the price bands. But basically, I've backed at 5.9 and my lay position was there at the bottom of the queue. So I'm exposed for the minimal amount of time between those tick increments, being 5.9 and 5.8. Half of my stake is filled very quickly, which offsets my green zone, means that my first red tick is now at 6.2 instead of being at 6.0. So I'm just working that little buffer in the direction that I want to see the price going in. So I give myself that extended period of a less lower liquidity risk. Now this is the point. You see that little flurry there on multiple runners. This is where the running money starts to come into the market a lot clearer, and this is the genuine money that is flowing in, and it is very, very late. People get hung up on trading 10 minutes before the start, and it's a really bad idea because you're trading noise, to be quite honest, a lot of the time out, unless there's something distinct going on. So a little bit more money has poured in there on the backside, being the blue numbers on the right hand side of that particular column on Chef d'Oeuvre. And you can see that there is more money back in that. So I've changed that over to the second ladder there, just so I don't confuse you. But how did I know that price was going to happen? Price move was likely to happen anyway. And I say likely because that's all it was. It was likely to happen. I was looking for a confirming signal. I wasn't doing anything crazy or mystic predicting the future. Now the second half of my stake has come out there at 5.2. So what's happened there? We've backed for 100. We've removed half of our stake, offset our position very quickly, limited our risk, and then allowed the move to play out a little bit more. It's not a very large move, it's been very low stakes, and we've got 741 profit there. So the reason for that, I'm going to show you on screen here, is I believed that there was going to be more money flowing into the market based on activity that was happening elsewhere. So the price has moved 11 to 2, 5 to 1, 9 to 2. Obviously that's gone several different price points. There hasn't been an aggressive jump, as mentioned in the separate video which I'll put in the end screen about indicators, but it's showing us that there is interest in that direction, just highlighting that over on the market overview chart on the left there. Now, at this point in time, we've still got 40 seconds to the start. I don't want to be totally out of the market, so what I'm doing is I'm placing back positions in the market for a very quick scalp, a scalp trade being just one tick. So I'm offering a position in the market at what I consider to be a favourable price. We know that the pressure is going down on the price here. We're thinking in probabilities, we're thinking in likelihood. You know, we know money is flowing in that direction, more so the pressure. So I'm offering a price. Should it get matched, I straight away offer the lay price on the alternate tick, and you see I've right clicked and clicked in play SP there. That means if the race goes off, then this bet will be matched at the SP price. So I'm not left overexposed in play, which is, you know, it's a dangerous thing to be doing if you're new to trading, and it's just not advisable. It's not part of a pre-race trading plan a lot of the time anyway. So you see that tick gets filled once more there, or you know, we've had to move our position. But close out our position, £7 profit, right? And that was super low risk. Yes, it was low stakes. We'll show you with the Betfair screen here, the profit between the two. But the point I wanted to highlight here is we was just thinking in probabilities. We was thinking that, you know, which direction is the fill rate going in, which way is it pushing, even though it might not be going a big move, and then offering our positions in favourable points to be filled with that direction. But the most important thing is we didn't try and trade something that wasn't there too early. You see, overtrading and trading too early are the top downfalls of any trader, particularly early on, as demonstrated in this video here, where I profited from another trader's mistake. It happens all the time. Don't get caught on the wrong side of it. Better still, make a few quid from it instead after watching this video. Thanks for watching. See you next time.